chairperson that's elected at this point in time, but we can begin the meeting at change of agenda by electing a chair. I think it's either you or Chris.
I know, you can't chair another committee.
I nominate Moira Lang to be chair of the audit
Okay, now I'm
committee.
a voting delegate, I'm a chair of HR.
Moira, I feel like we are adding a lot to your plate. Chris, do I get a second?
I second that. The good thing about audit, the chair opens the meeting, closes the meeting. So I think this may be fairly easy for you with your heavy workload, Moira.
Okay. All right.
And you don't meet that.
Whatever.
It's quarterly, and it's not even that often.
I know. That's one of the reasons why
It's a good one.
last week I volunteered to be on the committee. Now I'm chairing the committee. Things move fast.
And you can work directly with Chris in finance, but
Okay.
they are a little different.
Okay.
So Moira,
Yeah, I mean, there's a heck of a lot I don't know about
that'll be part of the fun.
This committee and.
Yep.
Okay, so I guess since I've been somewhat officially elected chair, I will call the meeting to order. Do we have any public comment? No. Therefore, we have no committee response. The only person who was at the last meeting who can approve the minutes is Chris, I believe.
No, I was actually.
Oh, at the last
Yes,
meeting?
yeah.
The minutes look fine to me.
Okay,
Transcript.
it's a transcript,
Oh.
and it is what it is.
Yeah, and it is what it is, yeah.
All right, so that's done. And now we've elected a chairperson.
Yes.
And now we're taking a look at the claims auditor quarterly report, quarter 4, TSD posts.
So, TST BOCES, they wrapped up the 4th quarter. We now actually have someone else doing our claims auditing in-house, but, so they're not here with us today. There's nothing on this that is really unusual for us. If there's anything that jumps out at you, please let us know and we can kind of go over it in more detail.
One thing that jumps out at me.
Is this the document we're talking about here?
Yes,
So I know what I'm gonna say?
Yes, I do.
Yeah.
I do. I don't even know what I'm
Do
looking
we
for.
need a footwear policy, Sean?
I can explain a little bit on that one. That's very common in school districts to provide certain types of steel toe footwear for certain employees. It typically is not written in any kind of contract, but it's a safety, it's more of a PESHA type thing that schools do. TST was hung up on, we have to have a policy for that. In my experience, it's not common for a district to have a policy. If it chooses to, they can, but it's typically not something in a contract. Maybe you could, but it is more of a safety thing to make sure that our people are equipped with the right uniforms and protective equipment that they need to do their jobs. So,
Sean, do we have a policy that we might amend that has anything to do with buying safety equipment or?
I would suggest a memorandum of agreement with the union. It's really
Okay.
the amount is subject to negotiation, so.
Right, so you can see here, right, someone purchased boots for $282. Someone found boots that serve the purpose for safety for $129, right? That's quite large difference there. And so I think what would be reasonable is not to exceed, right? So you can definitely have something like that.
I think the policy, there's something under safety that says we need to provide personal protective equipment. There's something in there that I did look up and I said, it can fall under this. So I don't really think the policy, I think what you're saying is more of, because I did look it up.
$175.
I don't know if there was actually.
Okay.
Yeah.
Okay. And then,
Hey, folks, usually when they do PPEs, they specified a select brand, a preferred vendor that meets certain criteria. And there's a threshold for that the cost would not exceed.
Yeah, agreed.
So we just need to do that.
There is a current threshold right now for $150, and there is a request to move it to $200. It is it's called the annual boot allowance.
That makes sense. 200 is reasonable.
Yeah. Particularly.
Not in my world, Chris Malcolm.
They're either slip resistant or steel toe. I bet you it's gonna, with shipping and tax and everything, it's gonna be pretty close.
All right, I just want to make sure I'm understanding what's being discussed, that we already have something.
A threshold of 150, and it must not be in policy, it must be in the EA contract,
Yeah,
and they
maybe that's
probably
what it
didn't
is.
know
Yeah.
to look in the EA contract. I mean, I'm reading some information from Jen Doolittle, who's the president of the Employees Association,
Gotcha.
so.
All right, so
That's
and
like
if it's not there, then we will
it's-
clean it up to make sure we have an MOA or MOU to make sure that it is there. Is that what I'm hearing as well?
And potentially increase a little bit.
Oh, to respond to the request.
Yeah.
Yeah, I'm sure that with everything that this has increased as well.
Yeah.
And dunk tanks are not okay? Dunk tanks is just improper use of public funds.
Ice cream too.
So I approved that. It was part of the orientation community building, I believe for one of the middle schools. I called the insurance, we cover dunk tanks, we cover bounce houses. It was again, an engagement event, and I did not have a problem as the business official saying that that was allowed.
But
Why did it end up on the?
I think that's exactly why the auditor is there, right? The auditor is there to say, do you have you analyzed your thinking around what public fund utilization is allowed? And is this something that would cross that threshold? So remember, these are guidance documents, right? And they help us be reflective.
Right, the purpose is, this is not capturing even probably 98% of our expenditures in the fourth quarter. Right, this is telling us what we should maybe consider, maybe
Right.
outliers that for us to consider. Is that a good way of describing it?
Absolutely.
Right, because when they're writing these things up, they don't call us and say that it's on here.
right,
And so they don't even give us a chance to really respond to it. They're going by the thing saying, oh, this doesn't meet that, and we're writing it down. So a lot of times what you'll do is you look at these things and, you have us explaining what they are now, but they're in writing in front of us and there's no control over that. So,
and so, yeah, ice cream, celebratory trips and flowers are all
yeah.
flagged here.
Yeah, graduation flowers, that's
I mean-
interesting. Yeah. And the other one that did jump out to me, or whatever the word we're gonna use, is student awards. Why may student awards be on here as something for us just to consider? Like, we may be able to purchase them cheaper, or we're not supposed to be buying student awards. I'm just wondering
Where is that?
it's on the first page towards the bottom.
I think the issue with that was the PO was created after the invoice.
Yeah.
Gotcha.
Right, so it's not
Okay.
so much that it was student awards, it was the fact that a purchase
timing.
order gives you permission to spend money.
Right,
That must be created prior to purchasing anything. We should never receive an invoice if a purchase order is not created.
and there's a
So-
bunch of these here, so.
There are a number of these, and we actually, Lily can tell you, we just spoke
Yep.
to the elementary and secondary principals groups yesterday.
Yep.
Reminding.
Monday.
Sorry about that, Monday, letting them know that I think COVID really got us out of practice for purchasing, and we're gonna be relearning together, and that they should be prepared to receive the materials that I'm pulling together with the business office, and that we are going to go through a thorough re-education process of how to purchase all different types of things, the whens, the hows, the whys, and that we will be retraining everyone and realigning our practices with the law. Okay, so we are in a situation here, this is absolutely related to new staff, COVID, summer school larger than ever before, like you are seeing things that are perhaps greater than we've seen in the past, and I will say people are out of practice.
And the one thing I think that leads to that is people don't understand how long it takes for a process to take place. You know, they go, oh my gosh, this thing's happening tomorrow, I think I need to go buy it. So I'm wondering, as part of your orienting people, letting them know how long they need to give, you know,
Yes.
in advance. And the other thing that I didn't know about some of this stuff, I assume that if they do it in advance, they also don't have to pay tax, is that?
So
Yeah.
we cannot reimburse people for tax, like, you know.
So I mean, I think
just
that
can't.
helps to know too.
Yeah.
Things.
The other one, Sean, you deliver to someone's home, like we can't do that, right? Like that's really, you have to have it here. So like there's a few here that we're like, oh, these are actually like just things that, you know, we're gonna assume that people never got really good training and we're just gonna restart. It's
Well,
okay.
the thing on the student awards, though, this is the date that actually we were cutting all the checks from our trust account. We do it on a special warrant for all the awards that go out to graduating student classes.
Oh.
That is never done with PO advance because we don't get the names until like 2
Got
days
it.
before.
Right.
And it's done on a special warrant, it's not even general fund money, so quite honestly, I'm not even sure why that's on there. Again, I don't think a question was asked, so we can explain what it was. So I think you're gonna see some of this stuff clean up because of the person being in-house now. And when Courtney has a question, she's walking right in and saying, explain this to me. And then she's writing it up. So I think you're gonna see a little less, but there's still gonna be, we're human, there's always gonna be issues, I think, but it's not gonna be, some of this stuff doesn't need to be on there if questions had been asked.
That's a great point. Nora actually used to call us all the time.
I say, but isn't this
Nora
right?
did.
And we
Right.
call other people all the time as well.
Yeah,
Um,
yeah.
But this is the point of the audit committee though, right? Is that when we see under this, we ask those questions, if those questions get answered, then we feel like we can move on. If they're not answered satisfactorily, then we dig a little bit deeper, if I'm not mistaken, right? This is part of what we've been doing. I am curious, and I don't know if anyone has the answer, just to give me some ballpark figures, right? So we have, I don't know, quick count here, 11, 12, maybe 15 different items. How many POs in a quarter, right? And I would assume they're,
So to speak,
Here's the number of checks that are cut.
checks, yeah.
Sean,
gotcha, so the number of checks that were cut up to that point in time, or,
no, for that
particular
warrant.
warrant.
For that warrant.
So for the quarter, it was 1,639 checks.
can you say it one more time?
So, and then, yeah, so
The last-
One
so
thousand 639 checks.
For the quarter,
There was 2,333 transactions that were entered.
so I think that's helpful, I'm sorry.
Yeah.
And just to get some sense of scalability, right, we're talking about probably 99.9% of transactions, there's no question about, but with these 15, and given those numbers, right, like, all right, that's helpful for me.
And
Yeah, I was wondering that too. I actually have a structural question. Could you talk, when you say in-house, is that an in-house audit? No, what are you referring to when this goes in-house? What is that?
we were able to find someone to come be physically present here.
One day a week.
One day a week, she audits our checks and makes sure that everything is in order with, you know, as far as a purchase order, a, you know, requisition, everything is in place for that check. And then once she has audited them, they're mailed out. They're not mailed out until they're audited.
Oh my gosh, that's great.
It's
So
great.
that, but, so in other words, she's still independent, but then
She is
she'll
independent,
come in here to this, so that would also take care of a lot of, she would catch a lot of things.
Yes.
Or be able to ask in
real
advance.
time.
Be able
as
to
well.
ask, because, you know, TST BOCES is doing this offsite. You know, we were sending things to them. We're not available for them to ask questions.
Yeah,
So this brings that
Oh, that's
opportunity
great,
for them.
yeah.
what does EFT mean, the last call?
Electronic fund transfers, so
Oh, okay.
certain things that we have to send electronically,
Right, right.
like
That's
bond
what I tell you.
payments and things like that.
Or you can ask my bank who charges me EFT funds all the time.
Yes. So, these other things that were improper use of public funds flagged as that, like the flowers and the ice cream and the celebratory trip, are those things that that were approved by you or
Don't remember ice cream. We would have, obviously, if there's purchase orders, those all get, approved. But a lot of times these are purchased off of like a blanket purchase order or a purchase order to a company, right? So Tops, Wegmans, whatever it might be, right? And then they go and they'll shop there for those, and so it's the receipt that's being scrutinized, right?
I see.
Not the
So you
purchase
see
order.
what it is, yeah, I got it, okay.
And again, right, like, we'll get written up for celebratory ice cream. I think we're a $150 million organization, I think I'm okay with that, I'm okay with that.
I mean, isn't there some way to kind of validate the fact that there are times for the morale of the class or the morale of the school that is a reasonable expense? I mean, I just don't know why it should be, is there any way through policy, like you're doing with the work boots, to just acknowledge that these are expenses?
Well, we are actually going through the 6,000 series in policy, and we can definitely find a way to incorporate a statement, perhaps about discretion of the business office, right? Around, and,
Up to a point.
we do consult with the attorney, there are times, just this week, I've called Kate, like, hey, can we make this work through doing this? Is this okay?
Yeah.
And we try to find sponsorships for things, right, like we try, but I agree with you, Anne, I think that there's a certain threshold where, and reason, right? That discretion would be allowed.
I would say I appreciate that, and part of the checking is to make sure that we have a bunch of eyes asking questions, especially with public funds. And all of this, as I understand it, and please folks correct me if I'm wrong, is before we have another audit that will take place that will look at all of the finances throughout the year, right? So this is sort of the pre-check before the check. Am I right about that?
So the audit that we're going to do tonight just doesn't typically look at like the receipts, right?
Yep.
This in a way it is a precursor in the sense of this is like daily operations, right? And then we do the internal audit, which is through the BOCES, Questar, right? And they come in and we ask them to choose certain topics where they may do this exact same thing, right? Sort of digging really deeply. The financial audit that we're gonna go through today is all this hard work, knowing that all this was cleaned up and that everything was really, right? We've got everything in the books properly. Dwayne knows that we have these checks and balances, that what he's looking at, we followed the rules, right? So I think they all do play with one another, but maybe not so deeply, right?
Sure. I guess I'm making the argument that for me it's worthwhile.
Yeah.
Again, for spending public funds, that this kind of check actually is helpful as opposed to trying to lessen some of it.
Yeah.
But we'll find out when we go through the fund audit as well.
Well, and it has led to us, right, incorporating things into policy.
Right.
And so I think, Anne, your point is really valid.
But I did hear Ann explicitly say not to policy, that's what I thought.
Not your highest priority, but.
All right.
So, are we ready to move on? Okay. Review draft independent audit report.
Dwayne, are you with us?
I am. I'm here.
Great.
Great. Thank you, everybody, for a few minutes this evening to review the results of the audit so far. I don't know if it's easier if I share my screen. Would that be helpful?
Sure. Yes, Dwayne, yes.
Okay. All right, let me do that, assuming I can. Okay, hopefully you guys can see mostly a blank screen.
That's correct.
Okay, perfect. So what we sent yesterday was preliminary drafts of the district's financial statements, the management comment letter, the communication letter, and an executive summary. You'll note, those of you that have been here before, you'll note that we did not yet send preliminary drafts of the extracurricular funds. We're still working on getting some information, both from LACS and from DeWitt Middle. So there's a few things that we're trying to knock off the list of findings with respect to both of those building extracurricular activity funds before we wrap those up. But so that information is coming, it's in process. I will say, just in general, both of the middle schools and the high schools extracurricular activity funds were, I think, pretty typical from what we have found and from what we have talked about in past audit presentations. And I know, Amanda and I have had a couple of discussions already about LACS. Their process was not as good as it has been. They had some personnel turnover. They had some changes up there. There was some difficulty getting some of the information. So that process is being worked on. Okay, having said all that, let me dig into the executive summary first, and then we can talk in a little bit of detail about the other documents, but I want to start here with the summary. What you see in front of you now, the first page of the executive summary gives you an idea of the different reports that are issued and the results of each one of those. So we're issuing an unmodified opinion, a clean opinion on the district's basic financial statements. That is great news. It means that we believe the financial statements are fairly stated in accordance with accounting principles and that they don't require any modifications. Then you see here, there's a reference to supplementary financial information. So included in the financial report is not only the financial statements and the notes, but also a whole host of supplementary documents. Some of that is required by accounting standards. Some of it is required by state ed. And some of it is required by the federal government. But our report includes an opinion on all of that supplementary information. Then below that, this is also included in the financial report. Because we do the audit in accordance with government auditing standards, we are also required to issue a report on internal control and compliance with laws and regulations over the district as a whole. And that's what this report is referenced to. That report identifies no material non-compliance, no material internal control weaknesses. So that's also a clean, good report. And then below that, because the district, I should say, spends more than $750,000 a year in federal money, we're also required to do what's commonly called a single audit. It's technically called an audit under the uniform guidance, and we have to do that audit as well. And then we have to issue another report on internal control and compliance with laws and regulations. This report is specific to the federal programs that the district administers. There is one instance of non-compliance that we commented on in that letter. This is a comment that we had from a year ago and is continuing, and it relates to net cash resources in the school lunch fund. Regulations require that the district not keep more than 3 months worth of cash resources in that school lunch fund. And because the reimbursement rates were much higher, because there was a lot more revenue coming into the school lunch fund over the last couple of years, the district is over that threshold. So it's something that's commented on. There's a little bit more detail way in the back of the financial report that we'll talk about. But for now, reference is made to that comment. It's noted here the district spent about $10.5 million in federal money, mostly passed through state ed, in a bunch of different programs. And towards the back of the financial report is a list of all those federal programs. Down at the bottom of page 2 of the executive summary is a couple of other documents. These aren't part of the financial report, but they are separate. There is a communication letter. Auditing standards require that we communicate certain aspects of the audit with you. That's what this letter does. There's nothing in here that's too concerning. There is one comment about a new accounting standard, standard on leases that was effective and adopted this year. And then down at the very bottom of that second page, reference is made to the extra classroom activity fund reports, which, as I mentioned, are still being worked on. Reference here a couple of new accounting standards that are going to be effective over the next few years. There is a standard on basically computer software, computer maintenance agreements, things like that. That's going to be effective next year. An update to standards on compensated absences, accrued sick time, vacation time, things like that, and how that's going to be reported. That new standard is going to be effective 3 years from now. So beginning on page 3 of the executive summary is a 5-year financial statement analysis. This is mostly general fund information, but there is some information about the other funds. And this just gives you a sense of where things are with respect to the general fund compared to where they have been over the last couple of years. You'll see here at the very top of the page, total assets very close to where they were a year ago, a decrease of about $75,000, which in a, 39, I was reading 36, an increase of almost $3 million in total assets from 36,730,000 to 39,655,000. Most of that change is in the receivables, state and federal aid receivable, taxes receivable. All of those things are combined into that receivable number.
Could I just ask a question? I was wondering,
Yep.
The receivable and the tax money, maybe Amanda could say, did that include the override? I mean, is that a bump, that increase have anything to do with the override? Or why is that increase?
So, and this is the close 2022, not 2023.
No, okay, that's what I'm talking about. Okay, so there's an increase, but why was there the increase?
This is mostly state and federal aid more than property tax.
Oh, okay.
Yeah, the property taxes are included in that number, but the main reason for the increase is state and federal aid as well as money from BOCES.
Okay, thanks.
Yep.
Significant federal aid increase with this.
So again, total assets increased a little bit less than $3 million. Total liabilities increased about $850,000 roughly. Accounts payable is up some, due to retirement systems is up some. Both of those numbers, vary depending on the timing of when things get paid. Unavailable revenues, this number increased substantially a year ago and then decreased a bit this year. This represents property taxes property taxes that are in the receivable, but have not been received within 60 days of the end of the next fiscal year. So to put that in layman's terms, this is property taxes receivable for 21-22 that were not paid to the district by the end of August of 22. So they're still outstanding. And if they're still outstanding at that point, they're not considered available to be used currently. So they show up in the general fund as a deferred inflow, unavailable revenue. Okay.
The city,
Yeah.
They do. But they don't make us whole until typically towards the end of this year. So this money
Right.
will come in. It's
Okay.
just that we have to. Because we
Okay.
have to.
Right, so this is, right, this is the way you account for that
oh, okay,
due to us, right?
okay.
Right, yep. So the total fund balance for the general fund increased about $2.4 million from 27.3 up to 29.7 million. You can see a significant increase, roughly $2 million increase in reserved restricted fund balances. And on the next page, we'll see a little bit more detail about what's in there. Assigned, which includes encumbrances that are outstanding and also includes the amounts that the district has appropriated for the 22-23 budget. That also increased about $1.3 million. And the unassigned fund balance decreased about $725,000. And the unassigned fund balance is now below the 4% limit that state ed has set, or the general municipal law has set. So you may recall last year the district was over the 4% threshold and now below it. So, so one of the comments that we had made last year no longer applies. So that's good news.
Dwayne, how close are we this year to the 4% threshold?
3.75.
Good.
And Dwayne, I'm also the restricted or the reserves, remember our goal for e-buses is to try to fund that capital reserve as much as we can. So we put 3 million to fund the cap reserve. That's why you're seeing that number jump up. It is for a purpose to spend it. So it's not like we have this money in a reserve. It actually is to support our operations. And you will see a Proposition 2, coming up in fiscal year 24 proposals to the taxpayers for e-bus purchases. So Sean, that aligns with what we've been talking about at facilities.
So e-buses are, I take it, more expensive.
A lot more expensive.
Significantly.
And also the infrastructure pieces, right, to support
And if
that.
federal funds come through to support that, would you be able to transfer the money back?
We will need both and to
You'll
achieve
need
our
both,
goals.
okay.
We will
And
need
state
both.
funds as well, right?
That is correct.
As
We
well.
will need everything we've got to try to achieve the goals that the state has put forward to us on the timeline that they have.
How much just?
And then
And the flip side, as I understand it, folks can go wrong,
It's-
is that as opposed to
Yes.
spending $5 a gallon of fuel to be able to travel a particular mile, that we're now be going down to about 3 to 8 cents depending on the bus per mile,
Wow.
depending on the
Oh,
charge
that's
and everything else.
fantastic.
With that being said, it still does not include the infrastructure that's gonna cost us significant money as
Right.
well. But to actually run the buses is significantly
Wow.
less costly.
How much is a bus cost? I know, I'm sorry.
It's
around
over 300,000, yeah. So I think we're getting estimates of 350,000 per bus, where I think it's like 148 when you go,
Twice the
160.
cost.
Wow.
And that doesn't include the,
That does not include the
Electric
charging
lines that we have to
station
put in.
and all that.
Right.
but we're moving forward with electric
Too
buses.
slowly, but we are. Moving forward.
Thanks for your patience on that, Dwayne.
Yep.
I think it's important
I think it was a
to,
great
it
question.
was important to sort of.
Yeah.
Yes, agreed. So the next part of the executive summary refers to the changes in revenues and expenditures. Again, these are general fund numbers. You see property taxes in total increased about $4.2 million from the 2021 year to the 21-22 year. Part of that is due to the timing, and we talked about those unavailable revenues going down, which actually makes the tax revenue increase because you've got less of it that's unavailable. So some of that increase is just due to property tax increases, and some of it is due to the timing of when those taxes get paid by the taxpayers and when the district receives the funds. State aid increased about $3.4 million during the year, from 30.6 to $34 million. And then other revenues increased a little bit. Total revenues increased about $8 million from 21 to 22. And then down below that, you see the expenditures, which increased about $5.7 million from 129.3 million up to 135, a shade over $135 million. And so,
Wait, I'm so sorry. I'd like to just go back up to revenues.
Yeah.
The state aid, although it looks significant, please go back to the years prior to the pandemic adjustments, and you'll see that actually, we're a little bit above what we got 2-3 years ago, significantly above the prior year. But remember, they did that adjustment down for state aid, so please just note that.
That's right. Yep. A fair amount of that state aid increases to catch up for prior year decreases. Yep. So total fund balance, again, as I mentioned, increased $2.4 million. And then at the very bottom of this page is a little bit of information about the other funds. Capital outlay, almost $13 million in the current fiscal year. A little bit less than the year prior, which was 14.1 million. The special aid funds, you see a really significant increase there, both in revenues and in expenditures. And most of that is due to a lot of the education stabilization fund, the COVID money that came in, actually went into the special aid fund first, and then got transferred to the general fund. So, so that kind of raises both the revenues and the expenditures for those, for that fund. And then school lunch fund, you can see an increase of about $500,000, both in revenue and in expense. Total revenue of 3.3 million, total expenditures of a little bit more than $3 million. So page 4 of the executive summary lists the different reserve funds that the district has. And you can see, again, so it was mentioned, total restricted funds increased about $2.1 million. You can see where most of that is, again, as Amanda had mentioned, the capital reserve increased from roughly $1.5 million up to $4.1 million. The ERS reserve was used a little bit, so it's about $500,000 less than it was a year ago. The property loss and liability reserve was used a little bit. The employee benefit and accrued liability reserve was used a little bit. And then interest earnings on the other funds brought in a little bit of change. The assigned fund balances, again, the 7.7 million is what was in the district budget for 22-23. So it shows up here as assigned since it's appropriated for the subsequent year. And then the encumbrance is pretty stable from year to year. And then down here at the bottom of the page, you can see that calculation of the 4% limit. And again, as we mentioned, you're within the limit at 3.75. Page 5 of the executive summary shows a condensed budgetary comparison schedule. You can see that the district's revenues fell short of the modified budget by about $1.8 million in total. Property taxes were a little bit more than budgeted. Other taxes, STAR money mostly, a little bit more than budgeted. And then the other, which includes a whole bunch of things, was well below the budget. And then down in the expenditure side, the district spent about $11 million less than the final budget. About half of that was in the instructional area, about $5.5 million less than budgeted. Employee benefits about 3.7, almost $3.8 million less than budgeted.
Could I ask about that employee benefit? What was the reason for that? That seems like a positive. Employee benefits were less, so that would have been health insurance premiums? Does that mean that the curve got bent, or there was increase in health insurance?
So I'll speak to a couple of things. Remember that this budget, we knew going to the public, it included everything because of all of the unknowns, right? So we put in expenditures, potential expenditures for virtual learning and in-person learning is because we had no idea what at that time our future held, right? And so we, we knew that this would probably be a year, if we didn't need it, that we would actually have some monies that would go unspent, especially in instruction. We also had people, right, we had a lot of retirements. We had people who, if you haven't heard, there are vacancies, right? So those are all the things, right, that are playing. So in terms of the benefits, Anne, benefits align themselves with both retirees and actives, okay? So what we would have to do is break down that benefit line a little bit further. And you can see, with the benefits, it is tracking back, a couple of years ago at a rate that we had a couple of years ago. But I think it's a combination. So we have slowed down the costs for sure. But we also know that coming back from COVID, health insurance for active specifically did go up because people were seeking the care that they delayed, right, during the time of COVID. So I would find it hard to attribute it to just health insurance because actives and retirees were going back to the doctor, coming off of COVID, so.
Okay, I wanted to briefly touch on the other letters, and then I wanted to look at the financial report and hit a few highlights for you. So what you see in front of you is the management comment letter. We use the comment letter just to highlight anything that either comments that we think you should be aware of, things that maybe are less significant, or to give you the current status of previous comments. And here is something I already mentioned, but I think it's great news, that the prior year finding we had with respect to the 4% rule has been resolved this year, again, because you're within that 4% limit. And we didn't have any current comments here in the management comment letter. And then I briefly mentioned the communication letter. The only thing that I really wanted to point out, again, right here on the first page, reference is made to that new accounting standard on leases. This changed the way that that operating leases are reported in the financial statements. So I just wanted to make sure that that was pointed out. I don't think there's nothing else in there that I wanted to hit. So I do want to hit a few of the highlights in the financial report itself. Those of you that are used to reading audited financial statements and have done it regularly may notice that the wording is a little bit different. There were some changes in auditing standards that took effect this year that required us to change the wording of the auditor's opinion itself. Not really anything new here. The order of some of the paragraphs had changed. You may remember it used to be that the actual opinion paragraph used to be kind of buried a page and a half in and people couldn't find it. Now the opinion is right at the top. The opinion on the financial statements is the first couple of paragraphs. So it's moving things around to kind of highlight what's really important. And also the other change really to this letter is there used to be things that were kind of implicit, that weren't stated specifically, that now are stated specifically. So it's a little more clear as to, you know, what our responsibility is, what your responsibility is. And the report is a lot longer. It used to be 2.5 pages, and now it's a little more than 3 pages. When I started doing audits 25 years ago, it used to be 3 paragraphs, and now it's 3 pages. And it really doesn't say more than it used to. Okay, so if you're not going to read through this entire 95-page document, I'll be really sad. I worked really hard on it, but I understand. You don't want to look at the whole thing. If you don't look at anything else, I would really, really encourage you to read through this section that you see in front of you. It's the management's discussion and analysis. It doesn't have any detail. It's very top level. It's very, condensed information, but it gives you a good sense of where things are from a financial standpoint. There's information in here about the government-wide financial statement. So, the district's financial statements are presented on that fund basis, which is what you're more used to seeing on a month-to-month, meeting-to-meeting basis. But there's also a presentation of the government-wide format where all the funds are put together, including long-term capital assets, net of accumulated depreciation, and then long-term debt is included. Your share of the state retirement system is included. Your actuarially calculated post-employment benefits, retiree health insurance obligations are included. So everything is put together in that government-wide format. And there's some good information in this management's discussion and analysis about that format. I wanted to hit just a couple of charts. Figure 1, which is on page 5C, shows a very condensed balance sheet on the government-wide basis. You see total assets of roughly $260 million, most of which is capital. You see total liabilities of $429 million, most of which is long-term debt and retiree health insurance. And so on a government-wide basis, the district has a net deficit of almost $200 million. That's mainly because those retiree health insurance obligations can't be funded. There's no way to set aside money for them. So there's a liability, a huge liability that shows up on your government-wide balance sheet with no assets available to offset it. And that's the main reason why you're showing this deficit number. Okay. There are also some nice charts and graphs in here that I think are really helpful. Sources of revenue is a really nice chart. You can see the district's revenue is 60% property taxes in the current year. It was 64% a year ago. So it's actually a little bit less property tax related than it was a year ago. And then there's also some charts here for expenses. 76% almost of total expenses are related to instruction. And then there's also information in here about the funds, about capital assets and long-term debt. Again, total capital assets, about $250 million at the end of the year. And then at the end of the management's discussion analysis is a section on future factors, basically what we call it. It's, what is affecting the district now that's going to be, important to looking at next year's budget and perhaps the next 2 or 3 years, and significant capital activity and significant debt activity and things like that. So that section is kind of a looking forward section. Okay. Those government-wide financial statements are presented here, page 6, page 7. You can see that health insurance liability sits right there, $336 million is the number that the district's actuaries calculated, is the cost of that obligation. And then the statement of activities, this is a statement of revenues and expenses. Again, this is government-wide format on page 8. The fund basis presentation begins on page 9. You can see the general fund as well as the other major funds, special aid, school lunch, and capital. And then there are reconciliation pages between the two different formats. Pages 13 through 15 relate to the self-insurance fund, the health insurance fund. You can see the district at the end of the year had almost $700,000 in assets in the health insurance fund, about $1.5 million in liabilities, most of which is a number calculated by the district's health insurance administrator for an estimate of claims that have been incurred but haven't yet been received. And so so that $1 million is an estimated number. And so the district has an unrestricted net deficit in the health insurance fund. And then the next page shows the revenues and the expenses in the fund. Between district employee payments, retiree payments, revenues of about $25.5 million, and expenses of about $26.6 million.
So that deficit, how does that compare with prior years? Is that more than in other years?
The deficit did grow during the year, yes. Yeah, the deficit grew by about $700,000 in the current year. I want to skip ahead. There's a couple of notes that I wanted to point to. I want to skip ahead of a few pages, but I want to go to note 6, which is right here on page 33. This is the capital asset footnote. This just highlights for you the changes in capital assets during the year. You can see net of depreciation, the district began the year with $149 million in capital assets and the capital assets grew by $7.7 million during the fiscal year and ended with $157 million. The district has a bond anticipation note of $17 million outstanding, redeemed an old bond for $24 million by issuing new debt. I'm going to skip ahead to where that new debt shows up. You see it here. So the district has, at the end of the fiscal year, bonds outstanding of about $53 million, a little more than that. And then installment purchase debt, capital leases of about 6.7. So total debt of about $62.2 million at the end of the year. You can see here how that debt is going to be paid off over the next few years out to the year 2037 when the last bond is scheduled to be paid off. This new note relates to the new lease standard.
Dwayne, I'm sorry to go back. I just want to make sure the bands that we're talking about, those are exclusively the capital project?
They are, yes.
They are.
Correct.
So this is what's been authorized by the voters for us to do the capital projects we're doing.
Correct. That's right. Yep. So this new note relates to the new lease accounting standard that I mentioned. This shows the district's leased assets, lease liabilities, They're actually the same, so there's no effect on fund balance, which is good, makes it easier. Note 11 on pensions. So we've talked about this before. The district shows a portion of the statewide pension system assets and liabilities. For the current year, it's actually an asset because both the TRS and the ERS systems were funded above 100%. So the ERS system asset was almost $3.8 million, and the TRS system asset was $44.4 million. Those numbers show up on your government-wide balance sheet. And then note 12 relates to the retiree health insurance obligation. Again, as I mentioned, the total liability is $336 million as calculated by the actuary. And this chart here shows the activity for the year. Began the year with a liability of $321 million. Actuarial assumptions and payments and everything else increased that calculated liability by roughly $14.7 million.
Dwayne, can you explain that a little bit more so we can understand exactly what that means?
So basically what it means is, so the district hires an actuary, to come in, and what the actuary does is it looks at promises that have already been made to people that have already retired, right, and are receiving a health insurance benefit. In addition to that, looking at current district employees that, either due to union agreements or due to their contracts, are also promised to benefit or are expected to get a benefit. Okay. Let me go to the very top of that note. You can see in total, there's 715 retirees that are already getting benefits. And there are 1,042 active employees that aren't yet fully eligible, but most of them are expected to get a benefit. Okay? So the actuary looks at all those people, looks at their ages, estimates how long those people are going to live, estimates how much health insurance is going to cost going forward, estimates, makes some other assumptions, which are down here, some of the most significant assumptions for healthcare cost trends, for how many of those people are married versus single, how many people are going to participate in the retirement plan, and so on and so on. Based on all of those assumptions and based on those numbers, the actuary then estimates that the district's total obligation for their plan is that $336 million number. Okay. Now, you're not getting a bill tomorrow for $336 million, right? Because this obligation is going to be paid out over 70 years, over 65 years, right? As these current employees, people that are just being hired now, as they stay and they retire, the obligation is already included in this number, but it's not going to be paid out until 40, 50, 60 years from now when those people retire. Okay, so did that help?
Mm-hmm.
Yep.
Okay.
We're just I'm trying to understand the net change as well and what that trend graph looks like, right? So we're increasing at $15 million from one year to the next, which is interesting.
Right. So basically what makes up some of these things. So, this benefit payment number, that's probably the easiest to understand.
Sure.
That's basically the actuarially calculated payments into the plan, payments into the retiree plan, right? So it's not the total the district paid for health insurance, it's the total the district paid for retirees' benefit to the plan. Service costs, interest costs, those are basically the additional accrual of obligation because everybody that's working for the district got a year closer to retirement, right? So they're closer to actually earning that benefit. And there's a cost associated with that. And that's what that service cost represents. The interest cost is basically an estimate calculation of future inability to invest money because you're using it to pay for retirees' health insurance. So, yeah, so that's what those changes represent. Okay.
Thank you.
Okay, let me skip ahead just a little bit further. Here are more detailed schedules of budgetary comparisons that show, revenues compared to budget, expenditures compared to budget. The significant shortfall that we talked about is here in the federal money, where the district had $4.4 million of federal sources in the budget, most of which didn't come in.
Could you just explain how come they didn't come in? I mean, did they not come in? Are they going to come in? What is that about?
Yeah, so we're in the middle of spending, and so, right, so it's a reimbursement program of expenses, right?
So we spend and then wait.
Oh, I see, so it will come in.
Yeah,
Okay.
it's an obligated, it's like the smart bond, right? It's set aside, and we
Okay.
have to spend the money,
Oh,
and then they give it to us.
and eventually the money
That's
will
right.
come in.
That's
Oh,
right.
wow.
Right.
Wow,
Eventually.
eventually.
Yeah.
Oh, that's pretty wild.
And then another page, expenditures compared to budget. We talked about that 11 million, but this provides a little more detail for where it is. I wanted to turn towards the back, almost at the end of the report. I know I had mentioned the federal money that the district spent. And here is that chart. It's on page 78. And this shows all of the federal programs that the district spent money in during the year, including Title I, including the special education cluster, including the child nutrition cluster, and including the education stabilization fund. Again, the total spent was around $10.5 million. We have to assess the risk and assess based on the size of each one of those programs, determine which program we're going to test. For this year's audit, we tested the Education Stabilization Fund, mostly because it was the largest program and because it's new, that's all the COVID money. And there's, some, I don't want to say uncertainty, but I guess flexibility in how some of that money is spent. So because of that, the federal government assessed it as a higher risk program. And so when they tell you that it's higher risk, you test it. So probably for the next 3 years, as the district spends that money, we'll probably continue to test it on an annual basis. Again, as we mentioned, there was a finding that cash resources comment that I talked about. And so it's here in more detail. The district exceeds the allowable limit by roughly $350,000 as of the end of the fiscal year. And some of the wording here is probably going to change a little bit. Some of this wording was based on last year's report or last year's comment, but we're going to be, updating that wording before the report is in final form. And with that, I will open it up to any other questions that anybody might have for me.
Dwayne, can we go back to page 94 of the document, or page 80 as it's listed?
Yep.
In terms of this, in section 1, it says non-compliance material to financial statement noted, and it says yes. Right? It's
Yeah,
marked yes.
that actually should say no. I got to fix that.
Okay.
I was hoping if I went by it quick enough, you wouldn't see it.
All right, well then, I guess I don't have a follow-up question.
Sean was a granola bar.
And then, so I guess, but relatedly, and not, I was wondering if it was connected or not, but what the finding that we're noticing is that we are out of compliance with our school lunch program.
Correct.
So
Right.
cash
Yeah.
on,
And that's what this finding is here.
right, that's what that is?
Yes.
All right, gotcha.
Yep. Correct.
Fantastic.
Okay.
Can I ask a question? Another
Sure
question?
can.
The question I have, I'm gonna enjoy reading 95 pages and understanding 0.3 pages of what I just read. But as you look at this, and as our outside independent auditor, beyond what you identified, we are in good financial standing.
Yes.
I just want that on tape.
No, I think, the results of the district audit, I think, are really quite good. As we mentioned, we got rid of the comment about the 4%. I think that's terrific. Other than the continuing comment about net cash resources, we had no findings with the district's financial statements, which I think is terrific. With, the extracurricular activity funds, we talked about that. Those are kind of lagging behind in a couple of instances, but I know we've had some discussions about that in the past, and we're going to continue, and I know the district is going to continue to hopefully make some progress in that.
I do want to take a moment to say that when you look at this, we must acknowledge the work of Emily Scheib,
Oh, thanks,
Angela
I was gonna
Jordan,
say,
and Sydney Wade.
No, it was,
Emily,
so
I listed
much
her
work.
first for a reason. Emily absolutely, as the treasurer of this district, is such an ethical steward of every keystroke and every moment that we spend, in operations. And I just need to say publicly that this is such a credit to the work that you do, Emily, and I really cannot appreciate you enough. Really, truly, truly, and worked with the auditors, gave all of the information to the auditors in a timely manner.
Tried.
It was really absolutely fantastic. And also, said, okay, yeah, we gotta fix that, and did it immediately, right? If there was anything that we recognized together. And then also, worked with the auditors in the same way, saying, I don't know if that's right, right? Think about, this is, so it was really it was fantastic, just stewardship of this process. And Insero, thank you, Dwayne, and your team, for working with with BOCES and CBO, and then coming over then to us in the district and being here, and being so diligent. So I just wanted to say thank you for that.
Yes, and I'll add my thanks to all three of you, to Amanda, to Sydney, to Emily, and to Angela, even though I know she's not here, for all of their work, because it is a massive amount of work to get to this point.
Thank you.
Thank you.
You all do.
Thank you very much. It means a lot.
Oh, it means a lot to us.
Mhm.
No, it is fantastic.
Gratitude does that sometimes.
Are we done?
Yeah, you can tell Emily is used to getting compliments. She is uncomfortable. It's
Oh, God. So I guess we are done. Do we have any action items or agenda setting for next meeting?
So
That's the beauty of audit.
No. All right.
So we'll bring this to the board, right,
Uh-huh.
so there is an action item, right?
Right.
So at the board meeting, right, this audit, right, with that correction, and Dwayne, if there's anything else that, you know, you see, and then we'll need extra class, right,
Yeah.
information, that would be taken to the board level, to, you know, to be accepted. Tricia has the resolution language that, you know, we use year after year. It's probably smart to do a mini version. I cannot do what Dwayne does, but I usually try to create a chart. And Anne, I think I really loved your question about sort of breaking down the benefits, right? Because that's what I was doing, I'm sorry, I was doing, like, you noticed, I was not texting, I was on my calculator, right? Like looking at like, oh, okay, so we actually went up 5.23% in health insurance from the prior year, which went up 7% from the prior year, which went up 7% from the prior year. So, right, like, so what was the driver there? I actually think I'll break down that number a little bit more in terms of the general fund. Just again, for educational purposes, for the board. I won't do that for everything, but I'll do that for some of
Yeah, I
those.
actually thought it was an interesting thing that you mentioned too, that it was because there were a lot of pent up appointments
Yeah.
and things like that.
Yeah, and so we'll show the data, right,
Yeah.
to around that. And then
When are we thinking that this should go to
Yeah.
the board? We're not thinking this Tuesday, are we?
it has to go this Tuesday, and here's why, and I apologize for the reason. October 15th is the deadline
Yes.
that
Oh.
audits must go to the state. And Dwayne, that does require a board action prior to, or does it just, Sydney's an auditor of, you know, so she's saying yes, so yes.
We'll have finals by then, right?
By Tuesday.
By the 11th.
The 11th.
I certainly hope so. I mean, well, you know, unfortunately, some of that is, I guess, out of our control, just in terms of, as I said, the extracurricular activity funds. What we've told them
We do this.
is if we don't get information by tomorrow,
Understood.
we're gonna go ahead and make everything a finding that we don't have.
Dwayne, do we have to, in terms of the state, the way that it is written, do they have to go in together, or could we do the audit of the financials and then extra class separately?
I think they do have to go in together.
Okay.
The other, I mean, there is an option where the district can submit the final reports by the 15th. The board can approve them at the meeting after that,
Can do that.
Oh,
you know, and then you submit your approval on a date after the 15th.
The board action is always to accept the results.
Mhm.
So that does seem plausible.
Yeah, and we could accept the results and then have a presentation at a later date, like, we can do that too, right? It can be part of the consideration of accounts,
Mhm.
and then I can present at it, you know, if they're at the following meeting, or it doesn't have to coincide.
Right.
So any way that you'd like it to be, we can submit it and then, you know, have the acceptance.
I'm a little hesitant about
Yeah.
that.
yeah.
Just again, given the fact that board members will have no option to reject or accept at that point in time, and not that board members would reject. But I think it'd be better to present as it is, with the understanding that the idea about extracurriculars is not new to our audit,
Right.
right?
Right, and I do wanna say, you know, at our next quarterly audit committee meeting, we will probably by that time be able to look at our internal audit results, and we've chosen to focus on extra class just based on kind of what's happened in, you know, this audit. We thought it would be a great time to focus on that. So
Right.
that'll be
That's
there.
Wayne's like, the sense of, lack of urgency, that's what we were talking about.
Yeah.
We knew that internal audit was working in tandem.
So then maybe that's a conversation to put on the agenda for the 11th, even though it's becoming a more packed agenda. But I would personally prefer to give board members the opportunity to know what they're submitting to the state
Right.
before they, right? I think
Yeah.
that's a
And
better way to
it is a clean opinion and, a non-modified opinion on the financial report, and that isn't gonna change pages, which is great.
Sean, like Emily's treasurer report, we could do, and Chris, we could do a summary, like how we've sort of said, like, here are the 3 key points.
Yeah.
We could do something like that,
I like that a lot. I think that's a good idea.
and then I won't present, because it's a full agenda, but I'll present at a later date, and we always kick off budget season with a review of the audit. So we'll tie it in to the budget development.
So humbly, can I say, right, not a presentation, but a couple of talking points that outline that very process, right? So again, so we have it as, again, recorded, it's been a meeting, like this is the audit. We will review this audit, again, as part of the budget proceedings. We are gonna have our own internal audit that's focused on extra class. I think stating that clearly, and most board members won't know what they're voting on, because they may not see it, but I think having access to it in case they do is, I know I would want that courtesy if you're asking me to accept something. And if I'm accepting it's already been submitted, then that's a fake vote.
Can I just ask one other question? Is this, okay, so that's not part of it, okay. Because I was just gonna say though, is that going to be, okay, because if it was, it would be good to have some comments, but since it won't, that's.
We review those at audit committee.
Okay.
That's your.
Okay,
And what we can do is give board members more a heads up that this will be on the agenda if they have questions to reach out to
Right.
the chair of the audit committee.
Oh, yeah, and that'll be
well,
like.
as somebody not versed in audit and the language of it, I appreciated the mention you gave like of the pages. If you were gonna read, which ones you could focus on, like that's kind of helpful.
Yeah.
Right. Trisha, how quickly is this video available?
Tomorrow.
So that's, I could never explain OPEB like Dwayne did. Like honestly, from the actuary, like that to, we were like looking at each other like, we were a little starstruck, Dwayne, it was fabulous, it was so good. Really, so I'm wondering also if that is a really good reminder for folks.
Yep, once that link is set, I'll make sure that we send out to all board members as well.
Great.
Yeah, I think that's a good idea.
That's a great idea.
For folks who couldn't be here tonight and wanna know more about the audit,
Right.
view the audit meeting, and then we can answer any questions.
That's right.
Alright,
Sounds like a plan.
so we're done. Closing the meeting.
Fantastic, fantastic.
Alright, thank you.
Thank you, Dwayne.
Wayne,
Thank you.
Thank
Thanks, Chris, thank you.
Thank you, Mark, for being here.